Welcome to Reshair on ESPN 730. For the next hour, your host, Chris Reshaar, will bring fresh air to your financial needs. Excite, educate, and empower you to make sound financial decisions. Chris is a seasoned licensed mortgage consultant with NFM Lending. Originator license number 117266. Now, here's your host, Chris Reshaar.
Welcome to Reshair Radio. I'm your show host, Chris Reshaar. Glad to be back for another week of Reshair Radio. If this is the first time you are tuning in to Reshair Radio, we are excited to have you. I'll tell you a little bit about our show theme, and if you are tuning back in, if you listened to the show before, we thank you for being a patron of the show. So as you may or may not know, the goal of our show is to excite, educate, and empower Charlotteans to make sound financial decisions. And the question you ask me is, well, Chris, how do you do that, right? Well, I'm a licensed loan officer. I actually am a licensed real estate agent as well, although I don't have an active license. But the goal really is to kind of bring in our expert contributors who support the show on a regular basis and bring in special guests that talk about real estate, finance, financial planning, insurance, all kinds of different topics that really relate to your overall financial wheel. The show is a little bit slanted toward real estate because that's what we do primarily. Okay, there's only so much you can really do to talk about a homeowner's policy, right, Jay? I wonder if I just previewed our special guest here. So nonetheless, we're going to jump into introducing our guest here today. So backed by popular demand, we've got Jay McElveen from Goosehead Insurance.
Thanks, Chris. Happy to be here.
Welcome back, Jay. We're excited to have you here in the studio. And we actually are going to be talking a little bit about the 4 different types of homeowners policies that you may or may not need depending on the type of home you buy and what stage it's in. I'm really excited about that topic, Jay, that we're going to talk about a little bit later on in the show. That's our 4th segment, Jay. But before we get into the details and the meat of our show today, tell us a little bit about what you and your agency do and how you help our listeners.
Thanks, Chris. So my agency is Goosehead Insurance, the McElveen agency. I'm located here in Uptown Charlotte. What I do is I take a comprehensive look at a client's insurance and quote that over a trove of carriers. So I have over 25 to 30 carriers on my platform to give you the best absolute price. So I will kind of take your current policies and dissect them down and explain each coverage, what they actually mean, and what they do and do not cover, and see where you have some gaps and fill in those gaps and find you the best price in the market.
Awesome. Mm-hmm. That's great. And what I know from just working with you for the last year or so is that you're really all about really finding the best policy, right? I think your industry can sometimes be plagued with what is the cheapest premium, right?
Absolutely.
And we focus so much on premium, but we're talking about the largest investment that most people have in their whole life.
Absolutely.
Right? It's the one vehicle that creates the most wealth for people today.
It's
right?
not something you want to skimp a few dollars on. Usually we are the best priced, but it's not something you want to skimp on. You really want to pay attention to the guts of the policy and the coverages, and then let's talk about the premium. So, we really want to look at the like I said, the middle of the policy rather than the bottom of the page where it says annual premium. So I try to tell clients, we will save you money, but let's really talk about what the coverages actually mean and what they cover.
Yeah, I think we had a client really just in the last month or so where I had recommended you, and you guys had started a conversation. I guess there was some sort of disconnect on an email, and she didn't think you followed up. So she picked a national carrier.
Right.
Said, no, I'm going to use this. I never heard back from Jay. And I said, this doesn't sound right. So I got you involved. I said, hey, I need you to connect with this buyer. Apparently there was a miscommunication on an email address. And I said, look, I don't care what way you look at it. The policy that Jay is offering is superior coverage at a lower price.
Right.
And she had sort of made up her mind. Like,
Absolutely.
No, I am not changing. I'm sticking with this big carrier, and I'm not using your guy. And you obviously worked it out because in the end, right, the loan closed, and we used your premium in your policy.
Right.
And I think she sort of came around to, gosh, Chris is really trying to advocate as well as you were on her behalf to make sure she protects that investment.
Yeah.
So,
absolutely.
All right, cool. Good intro here to Jay. Jay, glad to have you in the studio again here this morning, back as usual. So Jay is our expert contributor from Goosehead Insurance. If you're just tuning in, you're listening to Reshair Radio. Next, we've got Rachel Chen with Prosted Real Estate. How are you today?
I'm doing fantastic. How are you, Chris?
Great. It's an awesome Sunday morning. And is it Prosted Realty?
Yes.
It's Prosted Realty. Every once in a while, I make mistakes. In fact, I make lots of mistakes on the show, but that's okay. Most people don't know the difference, right?
Exactly.
So, Rachel, we've known each other actually for several years.
Right.
We've worked together in the past, a little bit here and there, and you've supported NFM Lending, the branch, even with another loan officer that works with us here on our branch. But this show really is about highlighting you and giving you thanks for the support that you give our team. So, first of all, for our listeners, as a special guest, tell us, I understand that you're licensed in North Carolina and South Carolina, right?
Yes, that's correct.
And then you got just under 4 years in the business.
Yes.
All right, so that makes you an expert in my book, right? If
Thank
you can
you.
survive the first year, you're an expert by year 2, right? So one of the things that you had mentioned to me as we were sort of preparing, like, what do we want to talk about? Because, with our listeners, my goal is to make sure that we bring a well thought through, planned topic or topics so that when you listen to Reshair Radio, you're getting nice, concise meat, not just conversation that goes on and on and on. You're getting good information. And all of that information can be found back on my website, reshairradio.com. So at any point in this process, if there's something that intrigues you, you want to learn more about, or you missed a first segment or you missed a different segment, you can tune back into reshairradio.com and listen to this show in its entirety as well as others. But Rachel, I understand that you had an interest in new construction. You work with a lot of buyers, and it just seems to be a niche that you've sort of grabbed onto.
Right.
Which really kind of brought us into a really fun theme that we're going to talk about a little bit later. So what I'd like to ask you is, how did you really get started in the real estate business? Because I don't know hardly anybody that said in high school or when they were 4, I want to be a realtor when I grow up, right?
Yeah, that wasn't my dream growing up for sure. Although it turned out to be a pretty good one. So I was working as a CPA at one of the world's largest accounting firm.
Okay,
several
CPA.
Years.
So you've got good finance background.
Exactly. A few years before I got into real estate. And during that time, I bought my first house.
Okay.
And it was such a stressful experience for me. I just did not have, let's say my experience was less than perfect. And I feel like, going through that, I feel like people deserve better than this. So that kind of planted the seed. So a few years gone by, when life happens, I needed more flexible career. I went into real estate. Of course, my background helped because when I was working as a CPA, I had a lot of exposure to commercial real estate, big clients, and so that kind of definitely helped me through the transition too. So.
All right. So I can imagine that with you having your background in CPA or, in accounting, that kind of thing, that must help you in your real estate job.
Yeah, I would say for sure, because I love analytics.
Okay.
But I also love people, not like, people's perception of most CPAs. So real estate definitely helped me do both. And then it helps me bring that analytical background when looking at the stats, the detail-oriented, when you build a home from start to finish. There were so many caveats that if you do not pay attention, you're going to regret it later, and that's too late.
Okay.
So
that leads me sort of into, now that you've been doing real estate many, many years, what would you say to what you like most about being a realtor? And a lot of people like to say realtor, but it's actually realtor. There is no extra vowel in the middle there, but
I think they're just trying to emphasize it, but it doesn't make a difference to me.
okay. Some realtors don't like to be called realtor. Anyway.
So the part I love most was being able to add extra value, the insight, the guidance to when it comes to buyers that you can help make them make decisions that otherwise they wouldn't have, made.
Okay.
For example, I had this gentleman, he's a relocation client, and he found this house that he thought it was a perfect fit and almost meets everything he was looking for, wanted to write an offer on it.
So you're thinking you're doing pretty good, right?
Exactly. And then I was like, no, you don't want this house. And it's like, are you kidding me? Like,
Right.
this fits everything I was looking for. I'm like, didn't you share with me that you wanted something that's have a quiet sanctuary is really, really important for you, correct? And he
Right.
said,
So
yeah.
you wanted a quiet home.
Exactly. He said, this is plenty quiet. Look at the privacy and all that. I said, yeah, for now. Did you know that in 2 years that the highway extension is going to run through right next to your house? Would you want that? And he was like, oh my God, thank you, Rachel. So and I feel like a lot of time my job is not just about resolving problems, which although it is a big part of it.
Sure.
But a lot of times it's to prevent problems from happening
Right.
before you can even see it.
Foreseeing potential
exactly
hurdles
to
that they're not thinking about because they don't do real estate every day.
exactly. So I can list tons of examples like that where I feel like my job is really, really fulfilling, and I consider myself more of an advisor and advocate role for my clients.
Excellent. Well, that's great. I really appreciate that. And it sounds like you really take your career very serious and advocating for the clients. So that's great. All right. So real quick, what are your thoughts on the housing market in the Charlotte area? We've just got about a minute or so before we take a break, and we can pick back up on it after the break as well. But go ahead. What are your thoughts on the housing market today?
Well, I think everybody probably have anyone who has followed Zillow know that Charlotte is doing really well for the last few years. So overall, Charlotte region is still a strong seller's market.
Okay.
In a healthy.
So if you're selling a house, is a good time to sell.
It is still. Although the caveat that most people don't know that it matters for the price point too.
Okay.
So, for example, in a healthy market, you wanted the housing inventory supply to be around 6 months. If your house is listed under 250 and it's listed priced fairly, then you can expect to sell in like very short period of time.
Minutes.
Exactly, and often with multiple offers. And the housing inventory is only 1.3 months, so that's
Wow.
a strong seller's market. But if it's 500 and above, generally speaking, then for City of Charlotte, you're looking at 5.6 months of housing supply.
Yeah, so it could take you up to 6 months to sell houses over 500.
Exactly.
But 250, it could take 6 minutes. So there's quite a spread there. But it's really good information for our listeners to understand that depending on the price point that you may be shopping here, that you have to be prepared that you may have to bid above the price if you're in that first-time buyer price range, which really is today 300 or under.
Yeah, exactly.
Right? But if you're trying to buy a bigger home, you'll have a lot more to pick from, and you can probably negotiate your price a little bit more
Exactly.
flexibly.
We'll have more room. Yeah.
All right, cool. We're going to take a quick break. My name is Chris Reshatar. I'm your host of Reshair Radio. Stay tuned. We'll be right back. Hi, this is Chris Reshatar, host of Reshair Radio and loan officer with NFM Lending. Is home buying in your future? Buying a home is one of the most significant financial decisions you will make in your life. Each step in the process is important to ensure a smooth transaction. But the most important step, even before you look at houses or call a realtor, is to get pre-approved. A pre-approval is when a lender evaluates a loan applicant's eligibility for a home loan. The loan officer collects information such as their employment, income, assets, and current expenses. The lender then gives the applicant an idea as to whether or not they could afford a home loan or an approximate amount of loan they could qualify for. If you're looking for platinum level service and open communication through the loan process, call me, Chris Reshatar, at 704-277-4463. That is 704-277-4463. LO license number 117266, corporate license number 2893. Go to nfmlending.com for licensing information, or you can apply online today at themortgagegenius.com. Welcome back to Reshair Radio. I'm your show host, Chris Reshatar, licensed loan officer with NFM Lending, and we have a great lineup today. We've got Rachel Chen from Prosted Realty in the studio live here with us, and we're going to be talking about a fun theme we're going to introduce you in a second. And we've got expert contributor Jay McElveen with Goosehead Agency or Goosehead Insurance, who is a repeat offender, who we will hear more from later in the show. But nonetheless, let's jump in, Rachel, for our listeners that are just tuning in. We did a nice intro. We talked a little bit about your experience and what you like to do in real estate. But we have spent quite a bit of time really planning a nice theme for our listeners, the listeners here today, on really buying new construction. So you understand what new construction is. We'll talk about that in a minute. But we're going to talk about buying new construction, 10 things you need to know. So that is going to be our running theme over the next couple of segments. And as I mentioned in the previous segment, if you miss anything along the way and you are a listener, hopefully a regular listener, you can check back on my website, reshairradio.com, and listen to this show in its entirety as well as other shows and get all the information you're looking for. So, Rachel, why don't you first define kind of what is new construction for those that are kind of driving around, listen here Sunday morning, and may not know the lingo that we use in our industry?
Oh, for sure. So for our today's discussion, for the purpose of today's discussion, what we define here as new construction is a home that's typically built by a regional or national builder, and that you build from, you pick the lot, you pick the selections, you build from ground up. Now, for the purpose of today's show, we're not going to go into the spec home. What that means, it's an inventory home that builder has already picked a lot, started construction, and sometimes even already completed it. Now, that's also a little bit different from what we're going to talk about here. And
right.
It's usually a bit more simpler. So, yeah.
So basically, a new construction is a brand spanking new home that a probably local, regional, or national builder built, and or will build for you, I should say, not already done, but will build for you, that you kind of pick things out, right?
Right. If it's not an inventory home.
If it's, we're not talking about inventory, what we call spec homes in our industry.
Right.
All right. So jumping in, 10 things that you need to know. The first thing that you mentioned was number one, get buyer's agent representation. So
that's correct.
So what does that mean? What's a buyer's agent, or what does your representation mean?
Well, in North Carolina, there's buyer's agent, there's seller's agent. A buyer's agent means it represents your interests. A seller's agent, of course, represents the seller's interests, and then there's dual agent. I don't want to make this
We're
matter.
not going into that one.
Exactly. But so you have to know that the model home representative that's helping you, that's smiling, they do not represent you, even though they may help you.
No way.
Yeah,
you mean they represent
the
builder, and
exactly.
they get paid a commission from the builder?
Yes.
Ah, got it.
Yes, they have no obligation to negotiate on your behalf. They may help you pick a few selections, but they represent the builder, not you.
All right. So what does it cost one of our listeners to have you take them out as a buyer's agent?
I think it's everybody's favorite number, 0.
Yay. We like that. See, my listeners better be calling, because I've got a realtor here that's going to help you buy a home for free. Okay?
Exactly.
Now, there may be a few others out there, but my people will do it for free.
Yes. So what happens is that people probably didn't realize that when the builders set the price, they already baked in both sides of the commission into the price. So when you're buying a house without an agent, awesome, more money for them, but you're not getting the benefits, and for free, of course. So you want to make sure that you really, really, really do that. And when you first enter model home, make sure you tell them that you have an agent, because if you say no and later decide to have an agent, guess what? They may deny you representation.
Right. So number one, get an agent before you go see a new home. Number two, if you happen to, you need to make sure that they know you have a buyer's realtor.
Exactly. And you can even, if you haven't decided yet, you can even say, I'll give you her information later. But the key thing is, don't tell them, no, I don't have an agent, or I don't plan to have an agent.
Right. You don't want to go to court if you're getting divorced and use your ex-spouse's attorney. Right?
Yeah, that's
same
excellent.
thing. You want to go into purchasing a home with your own representation, your own attorney, but really in this case we're talking realtor.
Right. That's
an
excellent analogy. And so you also want to make sure that the realtors you pick has extensive knowledge in the new construction area, so they can help you understand and make informed decisions. Compare with pre-existing homes near the area, compare with other new constructions, help you pick out selections, designs, help you determine resale factor, negotiate, coordinate inspections, when things go wrong, you want them to be on your side to leverage using their realtor roles. So,
Absolutely. And sometimes these are big builders, right? They're
Yeah.
just going to do what they think is best and
Exactly.
leave you in the dust if you don't have representation.
Exactly, because when you think about it, Chris, if you were as a one buyer buy a house and you say, I don't like what you did with this and this, or if they did something wrong, they decide they're gonna, you want them to do something right, what they're gonna think, you're just one buyer. But if I am a realtor, so for example, ProStat has over 100 full-time professional agents. So what do you think I'm gonna tell them? Hey, don't wrong my client. First of all, I will never bring a client to you. And second of all, your reputation among all of us over 100 agents are ruined. Even if one agent brings 2 clients a year, and that's like 20 houses, 20 deals that they're not going to have. So,
Right. That makes perfect sense.
Yep.
So experience really matters. They need to understand the market. They're also going to help you negotiate, right?
Exactly.
So you can help the client negotiate with the builder.
Exactly. And we're going to talk about that later.
little
It's
bit
one
later.
of the things that we want to talk about in negotiation.
All right, perfect. Let's roll to number 2. Are you cool with that?
Yeah,
All right.
absolutely.
So number 2 is understanding the timeline. So if you're buying a new construction property, hasn't even been built yet, timing is super, super important. So what do our listeners need to understand there?
So we need to, it's kind of obvious, but sometimes we just tend to forget the obvious things. So when you buy a pre-existing home, starting from under contract to close, you're talking about average of 30 to 60 days. But when we're talking about building a home, most builders are going to need at least 4 to 6 months to build out a house.
New
So-
homes can take 4 to 6 months.
Exactly. So this can really impact your current home sale, your lease, your job relocation. So you want to make sure that you plan it out so that, don't sell your house and then do not plan on lease another place. And then you just don't want to be homeless for the period you're waiting for your new home. So.
Right. So I'm sure you've had homeless people before too, but it's not fun, right? You've seen the cases where people have planned poorly, and you've seen cases where people have properly planned. But
Right.
in my case, and I can't speak for everyone that's listening here, but my wife and I built a semi-custom home several years back, and we went into a short-term rental. We sold our property, got our money, put it in the bank, set it aside, and then we just waited. And we thought we were going to be in the short-term rental for 4 months, and we ended up being in there 6.5 months.
Yeah. And
Because it took
'cause-
them 2.5 months longer
Yeah.
to finish the home. And it was totally cool. We were prepared, and I had to pack stuff up twice,
Exactly.
but that was the reality of our situation, and we did proper planning. But sometimes people don't necessarily think these things are.
Absolutely. It's always better to be over prepared because you never know, things could happen with the weather, with the permitting process. So even though 4 to 6 months, but sometimes it could take up to 9 months or even a year. So be prepared, be flexible.
Perfect. Number 3 is you need to understand that the purchase contract is much different than a traditional purchase, and that it's different even from builder to builder. So why don't we hit a couple of these highlights?
Oh, yeah, absolutely. So, well, first of all, in a traditional one, you'll have what in North Carolina called due diligence and earnest money. In the builder's contract, you're not going to have the due diligence part. It's just the earnest money.
So you just have to write an earnest money check when you
Exactly.
go under new construction, whereas a traditional home, you have to give a small additional fee called due diligence. Okay.
Exactly. And also that the earnest money you write for the builders usually are much larger compared to the pre-existing homes.
Right. And the reason the deposit or earnest money deposit is larger on new construction is they're taking the risk to build a house from the ground up.
Yeah.
And $1,000 just might not cut it, right?
Yeah, for sure.
So that gives you a little more skin in the game for the builder to commit to doing a customized home for you.
Right. And you also have fewer exceptions to get out of the contract, kind of for
Good
the
point.
same reason that you were talking about with the pre-existing home. If you back out before due diligence period, all you lose is the due diligence fee. But with the builder's contract, you can't easily do that.
Right. The earnest money is a little more firm and harder to get out of. You
Right.
also mentioned that fees can be charged if there are delays in closing. How does that work?
Well, the builder's contract are meant to steer towards builders' benefits. So if it's delayed because of
By them,
by construction reason, what they call act of God or not, that they say it's fine. Some builders say we have, as long as we're not purposely doing it, we have up to 2 years to build a house. So imagine that.
But if you're a day late, forget it.
Exactly. But if it's the buyer that's caused the delay, they charge you cost and sometimes astronomical, hundreds of dollars per day.
Per day. All right. And then the last one that we want to hit on here before we jump off for our next break is that when you go under contract and you build a home, you often put a deposit down, but that oftentimes there's a design center where you pick out all your upgrades.
Absolutely.
Which could lead to additional deposits. Am I saying that right?
Yeah, you're saying that correct. So when you do an initial contract, you're kind of just like kind of guessing that this is the level of the upgrades I'm going to pick. But when you go to design center and you look, oh, I want that marble instead of the granite now. I want this. And guess what? It's going to cost money. So the price may go up. And there's also a timeline you want to make sure that. So once you go out of the design center, most builders charge you a fee to change your design selection.
Oh, so even if you make changes after your design center consult, it could be more money.
It could be. Yeah.
These are important differences in a purchase contract from a regular home.
Yeah.
Right? That you earnest money is harder a little sooner. There's no due diligence. There's maybe additional deposits along the way for design centers, et cetera. So I appreciate you kind of helping us get through number 3. So again, we're here in the studio talking with Rachel Chen with Prosted Realty, and we're really talking about new construction, 10 things that you need to know. Stay tuned. We've got a lot more to talk about. We'll be right back. Hi, Chris Reshatar here with NFM Lending and host of Reshair Radio. If you are considering purchasing a home, you may wonder what your financing options are. We offer a variety of loan products to fit your situation, including conventional, FHA, VA, USDA, and jumbo loans. Here in the Carolinas, some of the most common loans are FHA and USDA. FHA loans are popular in low-income and first-time buyers due to their less stringent requirements. They also have low down payment requirements and tend to have a lower credit score requirement as well. USDA loans also allow low and moderate income households to purchase homes in an eligible rural area. Home buyers who do not qualify for a conventional loan may be able to purchase a home with USDA. If you're looking for platinum level service and open communication throughout the process, call me, Chris Reshatar, at 704-277-4463. That is 704-277-4463. LO NMLS license number 117266. Corporate NMLS license number 2893. Go to nfmlending.com for licensing information, and you can apply online at themortgagegenius.com. Welcome back to Reshair Radio. I'm your show host, Chris Reshatar, licensed loan officer with NFM Lending. Got to get in there at least once to show that my license number is 117266 and NFM is an equal housing lender. So, Rachel, we had you here. We were talking about 10 things that our listeners must know before they buy a new construction home. We've talked about making sure they have an experienced agent, that they understand the timeline of the house. We've talked about that the contracts are a little bit. Number 4, you say, is that there are, in addition to the traditional appraisal, which determines the value of the home, there are extra certifications and value or appraisal reports necessary in new construction. Can you give me an example?
Oh, so I'll give you an example. So if the house is going to take 6 months to build, a month, about like 30 days before its completion, they'll have an inspector take a look at it, visit it, give a preliminary value, and then after that 30 days, after officially finish, they're going to come again, do a final certification. So be prepared, you're going to pay for 2 visits of appraisal
That's
fees.
right. 2, minimum 2. Sometimes I've seen 3, but
yeah.
most of the time it's 2.
2, yeah.
All right. So that's important for our listeners to understand when they're buying a house, that the appraisal process, there's a little more detail because the lender needs to certify that the house is lendable and all the way done.
Exactly.
Before they're going to let you sign your paperwork.
Yeah, and then
go to close.
Yeah, and read the fine print. So if the final appraisal comes back lower than the purchase price, you may need to take out of pocket.
Right. That's the other important piece about the appraisal process. If it doesn't appraise, read your fine print even before you sign the contract.
Exactly.
Because you may have to come out of pocket that
For the difference. Yeah.
Perfect. Number 5 is closing costs are typically higher. So let's talk a little bit about what costs might be different that are a little higher on new construction purchases.
Well, first of all, because it's a new home, so they would probably want you to put up additional, it's what they call capital contribution fee. It's for the original owners kind of putting capital to start the HOA up for the community.
I call it the welcome to the neighborhood fee.
You can say that. That's
right?
a good way
so
to put it.
basically, whether it's for lampposts or mailboxes or just money to start the HOA,
Right.
the homeowners association, there's usually a fee that I see typically run from $250 to $500.
Yes, yes.
Okay.
You're absolutely right.
All right. Number 2 is what? Deed or tax stamps.
Yes, so
Do you want me to take that one?
you can take that one.
All
if
right,
you
I'll
want.
take that one. So, generally speaking, when you buy or sell a house in any county in North Carolina, the county says, thank you for shopping, and we're going to take a little bit of the revenue from that sale of that home, okay? In this case, when the builder is selling you the home, even though it's typical for the seller in most counties to pay that revenue stamp that generates profit for the county to pay for roads and schools, what's going to happen is the builder is going to pass that fee on to you. There's no set rule as to who does what, but it's a common knowledge that the seller pays the fee on a regular sale, but in new construction, it's common for the builder to pass that fee along to the buyer.
Yep, yep. And I've tried to fight it, but
Yep,
good
sometimes
luck
you
with
can
that.
fight it, but most of the time you pay it. All right, and then the last one is we briefly touched on the Homeowners Association capital contribution, but what is an HOA setup fee? What?
Well, with the new constructions, that's going to be a subdivision. It's going to be a form HOA. Sometimes the builder want you to contribute additional money to help the HOA get started. So that's something.
Yeah, it's just basically the association is going to kind of manage the health of your community, right? To make sure that people are taking care of their homes. They have a good purpose. Sometimes we get annoyed by them when they see your trash cans are still sitting out and they send you a letter 2 days after you didn't take your trash can in, right? But they're trying to help maintain the property value.
Right.
But there's people and energy and costs that go into setting the association up. So those are things that, a combination of these 3 fees alone could be over $1,000 more
Yeah,
in closing costs. I see
Easily.
sometimes more.
easily.
Perfect. All right. So let's go to number 6 in terms of things you must know when you're buying new construction, and that is the home inspector may need to re-inspect multiple times. So talk to us about that.
Yes. So one thing, one very key thing you do not want to overlook is that with new construction, when you're building from ground up, the inspector may need to do 2, sometimes even 3 inspections, what we call pre-drywall inspection and final. And some inspectors split the pre-drywall into rough-in and insulation. So that's huge because you want to make sure that you know what's going behind the walls before they close up
Right.
the drywall.
So when you buy a regular home that's not new construction, you have one inspection because the house is already built, right?
Yeah.
But when you're buying or building a new home, you're recommending that they perhaps have a home inspection done before all the drywall goes up so they can look at the plumbing and the electrical and the HVAC stuff, anything that could maybe things that aren't connected properly or wires that are crossed. They can see them very easily. And then maybe we do one at the end as well.
Yes, a final one too.
So there's different types, but I think that kind of sums up the
Yeah.
basic category.
The
So
basic category is if you want to make it short, to make it simple, pre-drywall and then final inspection.
pre-drywall and then final. All right, perfect. Let's go to number 6 thing that you need to know. Be aware of incentives and sometimes beware.
Yes.
So let's talk about that.
So builders, a lot of times, especially the national builders, they already have a lending department, kind of a affiliated lender, what they call. And what they sometimes try to do is offering incentive and say, hey, we're going to give you $3,000 cost contribution towards your closing costs if you use our lender instead. So yeah, that's something you definitely want to be lookout for. But be aware because you want to make sure you did not overlook the hidden fees and raise interest rates by sometimes.
Yeah, there have been known some agencies would maybe charge you a higher rate because they're giving you all these closing costs to use their preferred lender, when in reality, it might not be the prevailing market rate. So you have to do your math and look at the numbers. And I know that you help your buyers with a lot of those sort of situations so that they're educated.
Right. I help them compare different lenders so they can see how long they stay at the house for which one makes most sense for them.
Perfect. Awesome. All right, let's go to number 8. All right. Number 8 thing that you need to know when you're buying new construction is negotiations, that things can be negotiable when it comes to the price of the home, but there are definitely some caveats that you want to share with our listeners.
Yeah.
So talk to us about negotiating a new construction property versus what we would normally do in a regular home.
Right. Two main thing I want to talk about is that, first of all, in our market, it's just, I'm just going to be honest, it's not likely the builder would go lower on the price, but they may be willing to give more incentives if you know how to ask.
Okay. So they don't want to budge on the price oftentimes, Rachel, because they don't want to see the values decline in that community and want to see them continue to climb over time.
Yes.
But instead of throwing in just the appliance package in the kitchen, you might get a laundry room appliance package too.
Right.
Is that what you mean?
Right. And you may be able to get additional design options. There are things that they're more willing to give than the rest.
Got it. All right. Well, that makes perfect sense. But what about timing in terms of the negotiations? You mentioned as we were preparing for the show that sometimes negotiations can be a little more flexible depending on the timing of the year.
Yes, and that's the second point. That's huge. That oftentimes we see that usually at the beginning of the project, or
so a new
neighborhood, like they're building, starting, or it's towards the end, they're almost sold out, or towards their year end or quarter end, you're probably going to be able to get a better deal.
Okay, and I'm sure that you are in tune with those things as the realtor.
Yes.
Perfect. So I want to make sure that if you're just tuning in, we're here in the studio with Rachel Chen from Prosted Realty, and we're talking about things that you need to know if you're thinking of buying new construction. If there's anything along the way that you want to ask questions about, you can call me or text me at 704-277-4463. That's 704-277-4463. All right, well, let's jump into number 9 thing that you need to know when buying new construction. That's understanding the differences in warranties. So talk to us a little bit about some of the things you want to share there.
Yes, so number 9, I think buyers should be really happy. We've talked about some of the hidden costs and caveats of new construction. Now we get to talk about some of the nice part is that typically it's a 1 year bumper to bumper insurance, kind of like when you're buying a brand new car. They cover everything. So
which is nice.
Yeah, which is very nice. So on month 10, you probably want to consider getting a re-inspection report so that you can submit that report and before month 12, so you can get claim for that home warranty. And number 2 is that for plumbing, electrical is typically 2 to 3 years. Structural is 10 years, and you also get 1 year of termite warranty. So that's a lot of coverage that's going to make you kind of worry-free.
Yeah, I mean, there's a lot to be thinking about there when it comes to the warranties on the home. But I think really the part that you're trying to really emphasize is that just because you bought a new home doesn't mean that home is perfect, right?
Yeah.
And that you really should exercise your right to have a re-inspection done prior to that 1 year bumper-to-bumper warranty to ensure that it's your real last chance to get the builder to come back. I mean, unless there's some sort of foundational or termite stuff, they're kind of out of the picture.
Yeah.
Yeah, after that first year. Like you said, maybe electrical and plumbing will come back.
Yep.
But really, for the most part, if you've got doors that are hung and they're not staying closed or just floors that are a little bit wavy, they're not going to fix that stuff after that 12-month mark.
Yes. So that's key. And you also want to confirm if the warranties are transferable from you to the next buyer, because that could be a huge selling point too. Good point. When you sell
See if the warranty is transferable. Great. So we have actually gotten through 9. We've got one more key thing that you need to understand in terms of buying new construction. But we are out of time for the segment. We've got one more segment left of Reshair Radio. So stay tuned. Again, we're here in the studio with Rachel Chen talking about the 10 things you need to know buying new construction, and we're going to tee up our expert contributor, Jay McElveen with Goosehead Insurance. So stay tuned. We'll be right back.
Did you know it has been reported that an estimated 80% of Americans have credit inaccuracies on their credit reports? Most people that have either inaccuracies or existing items that can be negotiated or adjusted do not know what their best score could be until they have found a new home or buying a new car or applying for a credit card. Then it's too late and they have to accept a higher interest rate or lose the opportunity altogether. The time to work on improving your credit score is before you need it. Whether you have a 440, 640, or even a 740 FICO score, there is always room for improvement. The National Credit Care Team is comprised of individuals dedicated to helping the millions of consumers plagued by credit inaccuracies, errors, and fraud. It is our mission to help inform consumers and alleviate the stress of working with creditors and credit bureaus. Together, we can maximize your scores to get the best interest rates possible and save you money. Call now, 303-747-6390. That's 303-747-6390. Or visit us at www.nationalcreditcare.com.
Welcome back to Reshair Radio. I'm your show host, Chris Reshatar with NFM Lending. I'm a licensed loan officer, and we host this show each and every week on Sunday mornings at 10 o'clock. We have here in the studio special guest Rachel Chen from Prosted Realty and expert contributor back in the studio, Jay McElveen with Goosehead Insurance. We are going to wrap up our theme here, Rachel. We've been talking about the 10 things that you must know when you're buying a new construction property, a brand new home, building it from the ground up. And the last one that we didn't get to really talk about was understanding how to pick your lot, like the piece of property or land that the house will be built on. What are some of the key things our listeners need to know there, Rachel?
So some of the things that you want to be lookout for is that most people want a flat land with privacy. So they want
a nice flat lot with woods and trees.
Yes, and so they want mature trees in the back. They want a decent sized lot so that you can allow for a comfortable distance with your neighbors after the house is completed.
Right.
So
that makes sense. And if it's not woods, they want a lake, right? They want something really cool. All right, cool. So what else do they need to be thinking about there? How does that work with the builder in terms of picking out the lot?
You also want to kind of maybe avoid power lines.
Okay.
Avoid major highways running too close to your house. Avoid deep slopes. These are the things that can impact your future sales and profit.
So picking out a lot is important, not just, obviously we know what people want. We also you have to understand what people don't want. Right?
Yeah.
It's rare that somebody wants a very deeply sloped lot. Now, it can sometimes accommodate for a basement, that someone might want a basement, but generally speaking, they want to be able to walk out the back.
They want to
walk around the yard, maybe have a little bit of land, or maybe somewhere to put a hot tub or a pool, whatever, not just a ravine, right?
Yes.
Occasionally you find somebody who likes that, but most of the time people are going to drive up and then drive right back out.
Yes.
And see the slope of the lot.
99.5%.
Unless you're like in Boone, right, where everybody has the same case.
True.
If you're in Charlotte, we're looking for flat woods, that kind of thing.
Yep.
What about adjacent properties? What do you need to understand there?
So you want to really research if there's an undeveloped land. You really want to know who owns it, what's proposed plan for it. Of course, no one knows what the future holds, but if you have already confirmed and proposed plan by the county that it's going to be a restaurant or shopping versus sewage treatment plan, your future house value is going to be completely different.
Right. So that's something that you do as a realtor, right? To help them understand not just what's going on in the community and the best lot to maybe pick in the community, but also to understand what's happening around the project.
Exactly.
Cool. That's awesome.
Yeah.
Anything else that they need to be aware of?
They also want to be aware of that the more desirable lots, a lot of builders, they charge a lot premiums for it, and they may forget to tell you that. So you want to be lookout for that.
So you might have a base price for the house at $275,000, but if you want that super nice lot that's level with trees, it may be another $10,000 premium.
Yes.
It's not uncommon to see that. So.
It's not uncommon to see that. And then I found that a lot of builders just happen to, forget to mention it, and then buyers overlook at it. So you want
right, they throw it in at the end after they got you hooked.
Exactly.
I get it. Well, you have really educated our listeners here, Rachel, on things that they need to know when buying new construction. And I appreciate the thought that you've put into planning the show for us. We'd love to have you back at some point in the future. and maybe bring some new topics for us. But
Yeah,
let's
love
go ahead
to.
let's go ahead and roll our time over to our expert contributor, what I call a repeat offender, Jay McElveen. You want to go ahead and reintroduce yourself, Jay?
Absolutely.
And then let's kind of roll out our topic. And I understand our topic really, it's kind of a hot topic. You see a lot of people asking about lately. But we're going to be talking about 4 different types of homeowners policies. This is the insurance that you secure when you own or purchase a home. And I didn't really understand, though, there were 4 different types. So I'm kind of excited myself
Absolutely.
to bring the material. So tell us a little bit about what you do again in case someone didn't hear you at the top of the hour. And then let's kind of roll out our theme.
So my name is Jay McElveen. I own Goosehead Insurance, the McElveen agency here in Charlotte. And we work with Chris and his team, and we help all their buyers secure homeowners insurance. We quote your insurance across pretty much every carrier in the state that is not a large captive carrier to find you the absolute best deal. So my job is to find you the lower price, better coverages, and lower deductibles. So I want to talk today a little bit about different types of homeowners insurance. There are not just 4. There are a lot of different types of homeowners policies, but there's 4 main ones I want to talk to about today. When you do purchase a home, your lender is going to say, okay, you need to secure a homeowners insurance policy. Well, your usual standard primary homeowner insurance policy is called an HO3. So it's an HO3 form. So homeowners 3, homeowners, what are you going to call it, HO3. That is for a primary residence. So that means you will be living there. You'll be moving in the home within 30 days. So a lot of clients say, well, I'm not going to be moving into this home for 90 to 120 days. So that is completely different, because say you do not move in that home, you close on the home and you don't move into that home for 90 days and the home, God forbid, burns down. The carrier can go in there and investigate, and they see that as a vacant home and you did not write that as a vacant homeowner's policy, they can actually deny the claim. And it does happen. It happens more often than you think.
Denied.
Yep, denied. You get no money. You still owe that mortgage. So
Yikes.
You really need to have that conversation with your insurance agent. Say, okay, I'm not going to be moving in this home for a couple months. And they need to write that as a vacant homeowner's policy until you move into it, so it's your primary insured or your primary residence. Now, if you're going to be moving in it soon, no problem. You can do an HO3 or an HO5. HO5 is kind of a more souped-up HO3 policy, gives you a little more coverages. It's more of a open peril policy versus a named peril. So another thing is a builder's risk. You know, say that a investor is going in buying a home, and he says, I just need a homeowner's policy. Well, if you're doing some serious structural changes to this home and you're knocking down walls, you need a builder's risk policy. You don't need a homeowner's policy because nobody's going to be living there. You're going to be doing changes to that home. Nobody's going to be living there during those renovations. You need a builder's risk policy to cover the actual structure. It's not going to give you personal property unless you endorse it on there, but you need a builder's risk. And another thing is they say, well, I'm buying a home. I'm not going to be doing any changes to it, but I'm going to be renting it out immediately to a tenant. So, okay, that's called a DP3 policy, a dwelling policy. A DP3 policy, things you want on that DP3 policy is, one, you want the dwelling coverage, of course. You want what's called fair rental value. You want to make sure that if something happens to that home, that insurance policy responds and pays you whatever that client was paying you every month.
Potential rent.
Exactly.
Okay.
You're going to lose money because usually on a homeowner's policy, you have something called loss of use. So that means you lose the use of your home. That insurance policy is going to respond and pay you loss of use. So it's going to help you have the expenses for the next year up to that policy limit. And say it could be $10,000. Well, that insurance policy will pay you up to $10,000 in the next year for loss of use. But on a dwelling policy, it's called fair rental value, or a couple of insurance policies have different names for it, but it all means the same. So they can kind of reimburse you for that lost rent. All right, it calls loss of rents. So that dwelling policy, you want to make sure it has personal liability on there. So if your tenant gets hurt and tries to sue you, you have liability coverage, and also medical payments. So that's called a DP3 policy, and you have a tenant. It is not an HO3 policy. So clients, I'm happy to talk with you about it. Just make sure whoever your insurance agent understands exactly what you're doing with this home, whether it's your primary residence, even a secondary residence. If it is, you say, I'm buying a home, and you don't disclose that it's your secondary residence, and you own another home, and this isn't going to be your primary insured home or your primary residence, you've got to let your insurance agent know that it's a secondary home because they still can deny the claim.
Absolutely.
So insurance companies are for profit. They when they can deny a claim, then they will. So you've got to make sure that policy is written on the right form to make sure that the insurance policy responds the way it's supposed to. And some agents will just say, hey, here's an HO3 policy, no problem, won't explain the coverages or anything, and the client gets it, and then 6 months down the road, their home burns down, and they've got no coverage. So you got to be really careful. And once you sign those papers, it's hard to sue an insurance agent for errors and omissions when you sign the papers. So saying that it was my primary residence when really it's just a vacant home.
Right,
So
and that can lead into, Jay, even just, and I've been in this business a long time. I teach real estate classes on mortgage fraud, and there are sometimes people who will try to say, I'm buying a second home. Right. And I'm going to buy a second home in Charlotte, and they close, and then they'll turn around and put a renter in it.
Exactly.
And let me tell you, it's not something that I will ever condone.
Absolutely.
And allow under my knowledge. And what will happen in those cases too is that then oftentimes that same person remembers, well, I better get a tenant policy in here, or a landlord policy, or you call it a DP3.
Absolutely.
Right. And then the DP3 policy gets forwarded to the lender that has the mortgage, and then the lender finds out.
Yep. And a quick example.
Wait a second, this is not a second home; it's a rental property.
Exactly.
So it's more than just making sure you're protected, but if people aren't honest and forthright up front, it could actually still be considered mortgage fraud.
100%. A quick example we just had. We're going against another agent right now for a home on the coast, and it is a secondary home. They're not going to be renting it out, and the other agent wants to write it as a DP3, which is a little less expensive, but we're writing as a secondary HO3 because it is a secondary home. Right. It is not a DP3. Mainly is when you're going to be renting it out. So on that policy it says loss of rents.
Right.
Why would that client need loss of rents if they're not going to be renting it out? So you really got to make sure, even though it may be more expensive, but you want to have the right insurance, because guess what's going to be more expensive when you have a claim?
When there's a real claim.
Exactly. So you're not going to have any insurance. So you want to make sure, whatever it is, just make sure you clarify exactly with the agent. And if an agent is not asking these questions, that's a huge red flag. So make sure they're asking the right questions.
I agree. So real quick, Jay, for our listeners, where can they get a hold of you if they need insurance for their home, or they just need a free evaluation of their current policy?
Absolutely. You can reach me on my personal cell. So I don't have an office phone because I want my clients to contact me directly. It is 704-453-0456. You can text me or call me on that anytime of day.
What's that
number? 704-453-0456, and that's my direct cell.
Sweet. And Rachel, thank you for being on the show again here. I understand you are offering a special incentive if you have some real estate needs. Why don't you share with our listeners your incentive here today?
Yes, so I offer exclusive guarantee certificate. What that does, if someone contacts me and mention Reshair, I'm going to give them a certificate that states explicitly that either I help them negotiate extra $2,500 worth of incentives or price reduction, or I'll give you $500 credit at closing.
All right. So for our Reshair listeners, if you call Rachel Chen at ProStead Realty, she's going to offer you a $2,500 exclusive guarantee certificate, which means she's going to negotiate incentives or the price down by $2,500. And if she's not able to do that, she's going to give you $500 of her own money at the closing table.
Yes. I'll write
so
you a check.
That's really nice. Where do
closing.
they get a hold of you?
Just same with Jay. I want my client to be able to get hold of me 24/7, through personal, but don't call me at 3 o'clock at night. 704-530-1608. Again, that's 704-530-1608.
Thank you very much. And just finally, you can listen to any show in its entirety on reshairradio.com. You can also find me for mortgage applications at themortgagegenius.com. That is my website portal for loan applications. Always looking for people that want to buy or refinance. You can always reach me at 704-277-4463. That's 704-277-4463. Thank you both for being on the show. We'll be back again next Sunday, 10 o'clock on ESPN The Game. Again, you're listening to Reshair Radio. I'm your show host, Chris Reshatar. Thank you, and y'all have a great week.
Thanks, Chris.
Thank you.
Hi, this is Preston Sandlin with Home Inspection Carolina. We do home inspections, termite inspections, radon testing, any of your inspection needs. One thing that we do a little different, we fix the small stuff instead of putting it on the report. So if you need a home inspection, termite inspection, radon testing, please give us a call. If it's a home inspection or a pre-inspection, 704-542-6575, or check out our website at homeinspectioncarolina.com.
Hi, this is Chris Reshatar, host of Reshair Radio and loan officer with NFM Lending. Is home buying in your future? Buying a home is one of the most significant financial decisions you will make in your life. Each step in the process is important to ensure a smooth transaction. But the most important step, even before you look at houses or call a realtor, is to get pre-approved. A pre-approval is when a lender evaluates a loan applicant's eligibility for a home loan. The loan officer collects information such as their employment, income, assets, and current expenses. The lender then gives the applicant an idea as to whether or not they could afford a home loan or an approximate amount of loan they could qualify for. If you're looking for platinum level service and open communication through the loan process, call me, Chris Reshatar, at 704-277-4463. That is 704-277-4463. LO license number 117266, corporate license number 2893. Go to nfmlending.com for licensing information, or you can apply online today at themortgagegenius.com.
You've been listening to Reshair with Chris Reshatar, a seasoned licensed mortgage consultant, originator license number 117266. Learn more online at themortgagegenius.com.